Hello everyone, my name is Isaiah Yates. I'm 20 years old. I'm a student at Stephen F. Austin University and I'm a business marketing major. I brought you guys here today so I can tell you a little bit about how to prepare a balance sheet for financial reporting. The first question that a lot of you guys probably have is what exactly is a balance sheet? A balance sheet is basically a statement of the assets and liabilities and capital of a company at any given period in time. It typically details the income and expenses of a company over an operating period, which can be anything from weekly, monthly, quarterly, or even annually. Balance sheet breaks down into three separate components, being assets, liabilities, and statement of stockholders' equity. Assets are basically what the company has, all things of value, anything from cash on hand to products for sale or even equipment and land. Assets break down into two separate categories, those being current and long-term assets. Current assets are those that are able to be liquidated within a typical operating period, usually a year or less. Long-term assets are those that are not able to be liquidated as quickly, usually takes more than a year, and the company would want to hold on to something like that, typically land or equipment or something of that sort. Next component is liabilities, which is basically what the company owes to all its debtors and loaners. Liabilities break down into current and long-term as well, current being those that are owed within a year, and long-term being those that are owed in a year or more. Finally, there's a statement of stockholders' equity, which just details the value of the common stock that was issued by the company, as well as the retained earnings, which is the money that's being invested back into the company rather than being paid out in the form of dividends to stockholders or investors. How to prepare the balance sheet. The first step that you need to prepare any balance sheet is list your assets. The example that I have here for you guys is out of my accounting textbook for a golf academy. You see that they have their current assets listed first in order of liquidity, cash being the most liquid of the assets, followed by they have their long-term assets, which is things like equipment and the land that they own. Those all are totaled up here at the bottom for a total value of $40,000. Next, you can see that we have our liabilities listed, also in order of liquidity. An example of the most liquid of those is salaries payable, things that you got to make sure that your employees are paid. And then we have long-term assets or long-term liabilities, which are things like notes payable, which are loans that are due in a year or more from now. Finally, the third component of this balance sheet is a statement of stockholders' equity. It's prepared by showing that the common stock value, which here we can see is at $25,000, and the retained earnings value, which is the money, like I said, that's being invested back into the company. It's at $1,000 here, and the total liabilities and stockholders' equity also equals $40,000. The fact that the liabilities and assets equal out is very key, because any company to be breaking even has to have their assets equal their liabilities, otherwise we're losing money, and the goal of any business is to make money. So that's a little bit about a balance sheet and how it contributes to the financial reporting process. Thank you guys.